Welcome to Mastering Your Financial Life, hosted by Judy Heft, the founder and CEO of Judy Heft and Associates, Financial and Lifestyle Concierge. This year, she's celebrating 27 years in business. In every episode, Judy interviews professionals who help others successfully manage their financial lives. You can find this show on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, Stitcher, and more. Judy is the author of 2 books, How to Be Smart, Successful, and Organized with Your Money for a Better Today and Tomorrow, and her latest book, Mastering Your Financial Life Cycles, How to Successfully Manage Money in Every Decade of Life. You can read chapters of her books and catch prior episodes of the show at www.judithheft.com. Now, here's the host of Mastering Your Financial Life, Judy Heft.
Hello, everybody. Welcome. Welcome to episode 79 of Mastering Your Financial Life. I'm so excited to be here with Dahiema Grant. Dahiema is a CPA. She's a fractional CFO, and she's a principal of her own accounting firm for 17 years. You're catching up to me, Dahiema. Anyway, so her firm handles accounting and bookkeeping and cash flow for startups, management, and then they do tax prep, of course. Here she is today. It's April 18th after a crazy few weeks, I'm sure. And she's ready to talk to us. She's also an avid runner and has run quite a few different marathons, New York and Boston. And I know that one year when I was talking to her, she was running one and it was like training right during tax season. So I don't know how she does it all. I guess that's why she looks so good. So Dahiema, welcome. I'm happy to have you as a guest.
Thank you so much, Judy. Thank you so much for having me on your podcast. I look forward to getting into our topic today and for connecting with your audience.
That's great. Yeah, I'm looking forward to it too. So, I think one of the things that, we're going to talk about is cash flow analysis and what does that really mean and why is that so important? I think, a lot of startups, especially, they start businesses and they really don't have a handle on, some of them don't even know what a credit and a debit is, I think, and they don't really have a handle on how to run their business. And so it's great to have someone like you to help them. So really, what is cash flow analysis and why is it important?
Yeah, I would say before I even mentioned cash flow analysis, I think we can just have a clear understanding of what entails in cash flow. And basically it's simple, right? It's just the movement of cash in and out of your business. And this activity can be seen on the cash flow statement, which I often call the forgotten cash flow statement. And there are 3 components of it. You have the operating activities, the investing activities, and the financing activities. And cash flow analysis is just understanding, doing an examination of these activities to learn about your cash position, to see what it's saying about your business. And so I think all businesses should conduct cash flow analysis. And I'll give you 3 main reasons why I think it's important to conduct regular cash flow analysis. The first one is liquidity management. This helps business owners to answer the question, do I have enough cash to meet short-term obligations? And those are these essential expenses like payroll or those immediate operating expenses. So doing a cash flow analysis helps business owners to have the insight to identify potential cash shortage. And so with that insight, they can make proactive decisions to address these liquidities, such as securing additional financing or make adjustment to spending. So that's the first reason. The next reason why cash flow analysis is important is it helps to gauge the health of your business. If a business tends to have consistent negative cash flow, it could mean that there is an underlying major financial issues. And this insight will help you to do further analysis. And again, from that analysis, you can identify the real source of these negative cash flow, so you can be proactive in making decisions to just address these issues so you're not having problems in the future. And then the third reason I would say is for budgeting and forecast, right? It's a big part of anyone managing cash flow. So with the anticipation of these future cash outcome, either a surplus or a shortage, it helps business owners to be able to can make decisions about resource allocation, investment opportunities in the event that you're going to have a surplus, or debt management, all which are very important to creating a robust budget and forecast. So regular cash flow analysis really helps business owners to have valuable insight to make decisions that can really impact the overall operations of their business. So those are three reasons it's important.
And one of the things that you repeated a couple of different times that kind of stuck out to me was being proactive. And I think that's so important. And I think, I think in the beginning when I started my business, 28 years ago, I was kind of running it by the seat of my pants. Even though it was a bookkeeping business, I was doing home office organizing. I was doing all kinds of different things. And I think that's kind of what a lot of entrepreneurs tend to do in the beginning. The money comes in, we pay ourselves, we pay ourselves if there's anything left over. We pay our bills. We try to get everything done on time, and we don't plan. How many businesses really reach out to meet with their accountants, in September, October, November, when they're quiet, and really plan for the next year so they can anticipate tax needs and other things too. Do they have enough money to purchase? It's really important. I think so many people don't pay attention to it.
Yeah, very important, and especially for those businesses who are now like in that growth stage of their business, right? The diapers are off, you're no longer treading along. You really want to focus on growth and performance. This is a time I think it's really valuable to start working on some of these things.
That's so true. And so what are some of the ways to manage cash flow? What do you suggest to people?
So some ways that we work with our clients the ways that we work with our clients, the first thing is partnership, right? We really work with our clients and lean on their knowledge about their cash inflows and outflows. And so once we have that partnership going and that conversation started, then it's time to conduct a cash flow analysis. And, I would tell anyone can start doing this. I would say first is you start with what you have available, the cash that you have available in your bank account. You can start with that, and we start analyzing that. And then once that analysis is done, it really helps us to understand our cash position. Then we work on managing the cash flow management. And that is, we work on creating a sales forecast. And from that, it helps you to see the cash that are coming in. And I would suggest that for those who really want to start working on cash flow analysis and cash management, think about your income and revenue for, let's say, over 3 to 4 weeks. And once you have that, then you can also, for that same period, think about your cash outflow. And then you're able to see your position. Are you going to have a surplus? Are you going to have a shortage? And then you can make the necessary decision for your business. And then once that is done, you can work into maintaining that healthy cash balance. And, I can get into some very specific tips that they can do to really enhance their cash balances.
So do you want to give us a couple of examples of those specific tips?
Yeah, so I would say, once the analysis is done, I would say focus on the sooner we can get funds into our business. It's so important. I would rather that the business owners have cash in their bank than their customers have that cash. So I would say work on sending out those invoices immediately once services has been rendered. Create systems so that those are automatic and send those out. We really want to work on reducing accounts receivable. Cash is king, and managing accounts receivables, that balance, it's important for us to really reduce it and help get funds in the door sooner. And we often have those customers who tend to pay a little bit slower than we want to. I would even suggest that they can offer incentive, for example, a discount or something that will encourage these customers from delaying payments. So really work on bringing in money into that business. The next thing I would say in order to manage cash flow is the cash outflow. Right. And this is where we can work with our vendors to negotiate favorable terms. If we're paying due on receipt, we can ask for terms of 30 days or 45 days. And no, I would say, Judy, this is probably possible if we have been good paying customers to our vendors, right? So if you have been paying your bills on time, then you have that room that you can negotiate to make sure that your outflows is in line with your inflows. And so you're able to align those. So those are just two quick tips that I would say anyone can start with. Start with what you have in your bank account right now. Estimate your inflow, estimate your outflow, work on bringing in funds sooner, and manage on the timing of when you need to start paying your bills.
Yeah, and that's so true. I think one of the things that you said, the first thing you said was getting your invoices out on time. And it's so interesting because I was speaking to someone the other day who had some landscaping work done on her home last summer, and she has not received the bill yet. And she's in the panic mode that how much it's going to be, and are they going to put this summer's landscaping work on it too? And this, I think a lot of contractors, they're not necessarily business people. They start these businesses. They're really good. They're painters or contractors. You know, I don't know, disrespect. They're great people. They know what they're doing. They're really good at what they do, but they're not bookkeepers, let's say, and they don't think they should spend the money to hire a bookkeeper or someone, so their invoices don't get sent out. They procrastinate what they don't like to do or what they don't know how to do. We all do that, I think. And I think that's one of the most important things is to get your invoices out and then get paid on time. Because if you're sending your invoice out so late, you can't expect people to pay you right away.
Right. And the other thing I'll say to that, Judy, even with getting the invoices out on time, you have to send reminders when they have passed the days, because customers are like, if you're not running after me to be paid, then I'm fine. So I think we have to be, again, that word proactive, send those invoices up, but be proactive about collecting this fund. Again, I want my clients to have the funds in their bank account, and then we can decide what to do with it instead of their customers having their funds.
That's so true, because if there's so many open invoices in your books, then you can't really project and, you know, do anything. You have no idea how to plan.
Exactly, because your expenses are not slowing down. They keep coming, right? Payroll is due, operating expenses is due, and you want to make sure that you have the cash available to meet these short-term obligations.
That's so true, and it's so important. This is great. Let's take a little break here, and then we'll come back and we'll talk some more. I'm here with Dahiema Grant, CPA and fractional CFO. Hey there. I just want to tell you a little bit about my new book that just came out called Mastering Your Financial Life Cycles. And here it is. It's how to successfully manage your money in every decade of life. I co-authored this with my CFO, Liz Levy. And together we created this manual that's going to help you through every stage of life. We talk about having a baby. We talk about young adulthood, pre-retirement, what to do when you're at that age of retirement. If you're contemplating divorce, do you need an estate plan? We cover all of these, each subject in a different chapter. And I really think that you're going to find this so helpful, because at the end of every chapter, we have checklists that you can look at and you can use, and they can be a guide for you. So this is a wonderful manual that we've created. It's available on Amazon. You can also find it on our website at judithheft.com/book. And we're here for you. If you need anything, reach out. I hope you enjoy the book. Here's another picture of it, just so you know what's going on. Here it is. And I'm really proud of it. It's my second book, and I'd love to have you read it and give me your feedback. Judy Heft, judithheft.com, financial and lifestyle concierge, celebrating 26 years in business. And over the years, I've learned so much. And what I've been trying to do is impart a little bit of this knowledge to you, so I can help all of you become as financially organized as I am. And now we're back with Dahiema Grant. So Dahiema, you know, we talked about cash flow analysis and having enough money and getting your invoices out. But so talk to me about being a fractional CFO, because I think, to me, in my brain, and maybe I'm wrong, it seems like it's a fairly new term that I've just personally only heard about it maybe 6 years ago or so. I didn't even know there was such a thing that existed. And now I feel that they are popping up a little bit. A lot of people, such as yourself, or CPAs, that are doing this anyway. You probably did it before you decided that you were a fractional CFO.
Right.
This is what you were doing. And now there's this term that everybody knows. So really, what is it? And, how does it work? And why should we work with the fractional CFO? Can you elaborate on that, please?
Yeah, I think there's a bunch of different things that's popping up in my head as you ask that question. But I think what I would say that there's been such a rise of entrepreneurs. So many people are starting their own business, and going back to what we talked about, that people are going into business for what they love and what they're skilled at, and they're not great at the business, financial, operating side of those things. And so I think there's a need for those who have made that decision that they no longer just want to work for themselves. They want to run successful businesses. They don't necessarily are in a need right now for a full-time in-house CFO or, a senior financial person. And so I think, in my opinion, I think this is where the rise for the fractional, which is basically like a part-time strategic person within your practice. So I think that's one of the reasons why there's a rise. There's a big need for having this insight, this oversight into your business if you really want to scale and grow. So with name, there's so many reasons why I think it's important to work with somebody like myself, a fractional CFO, or, there are different terms, a strategic financial advisor. Two quick reasons. I would say the first one is you get to leverage the expertise of someone who can really help and help to make very important decision in your business, especially operational or financials. And these professionals can help with analysis, like we talk about cash flow analysis, recommendation, give you just different insights into your business that you might not have the time or expertise to generate on your own. So that's one big reason why it's so important to leverage the expertise of these professionals. The next reason I would say is when it comes on to making long-term decisions within your business, sometimes internal teams, they tend to be biased towards a specific outcome. So when you're working with an external strategic person, they brings this unbiased viewpoint towards the goal that you're working on. And that can be very instrumental to the life and longevity of your business. So just working with someone who's on the external that is not personally or emotionally invested in a specific income is valuable to have. So I would say those are two quick reasons why I think it's so important. And again, I think this is the companies that will value most from those who are in that growth stage of their business where they really want to transition, they really want to pivot and switch. And so they will benefit tremendously from someone working for someone like myself or someone in that capacity.
That's so true. I think it goes along with the same kind of philosophy I have, hire professionals. It's always great. I mean, you can do your own taxes. You can do them on TurboTax. You can do them whatever, however you want. You can diagnose yourself. You can write your own will. You can go to Rocket, whatever it's called, Rocket Law, whatever that one is. No disrespect, but, you can do anything you want online today, too, especially. And so I think, to your point, it's really important to work with professionals that are experienced, that know what they're doing. It's like you're not going to Google your medical symptoms. We do, of course, but you're not going to listen. You're going to get a professional opinion. You're going to go to the doctor, especially if Google tells you, you're going to die tomorrow, whatever.
Exactly.
But it's always important to work with professionals. So I'm glad that we had a chance to talk about this because I admire you and you have a great business. And it's good to hear what you have to say. I love that you're working as a fractional CFO too for your people, because I think, you add so much value. So thank you.
Yes, great. I'm grateful to be able to can support, and especially female entrepreneurs. That's the group that we're up to someone or niche focused to really empower female entrepreneurs to understand the nature of their business and to really scale and grow. So we're excited to partner with them and to really help them in this way.
That's so great. You're out there helping people to understand. I like the word understand, because I think sometimes entrepreneurs starting out don't necessarily have the understanding of what they're doing, but they're told to do it. And it's good to have someone like you to bounce the ideas off of. So how can our listeners find you?
So they can find us on, similar to everyone else, LinkedIn, and also on our website. The name of our firm is DSG Advisory CPA. So they can just go on our website, www.dsgadvisorycpa.com, and also on LinkedIn.
Oh, thank you. Well, this was great, Dahiema, and it's really great to talk to you and see you as always.
Same here, Judy. Thank you so much for the opportunity, and congratulations on your show. It's been going great, and I wish you all the best to come.
Thank you.
Thank you for tuning into Mastering Your Financial Life, hosted by Judy Heft. You can read chapters of her books and catch prior episodes of the show at www.judithheft.com. Thank you for your positive comments and sharing this show with others.